Hey guys, welcome back to my YouTube channel. I know I've been gone for quite a while. I actually had to go handle some stuff and I couldn't trade, during that period or that time period, however you want to put it. Uh, it, it was, it was really challenging for me, but now, good thing I'm back. And without further ado, let's get back to, the content we have for today. Now, before I proceed, please, if you like the kind of content I produce, please leave a like and subscribe to the channel and make sure you share with your friends so that they get to learn some tricking things about ICT concepts as well. So with me in this channel, I don't just show you the simple trades where you buy at another block and sell at an equal high, or you buy at another block and take profit at an equal high, or you buy at a rejection block. We go deeper and actually show you guys some tricky, um, they call it some tricky scenarios in price action, which you too can capitalize on if you actually know what you're doing, regardless of it being a loss or a win or a mitigation. But at least it would have been something for you to handle. You get. Now that being said, let's get down to the business of today. Today I took a short trade on the British pound. Of course, you see this doesn't look like a short. Yes, and I took a short trade because I'm generally a day trader and is short-term trader. It's ended with me not taking the amount of profit I would have wanted for a reasonable trade or for my standard type of setups. Now you can see the trade from here when I posted it on my Telegram channel. Also, if you don't know the Telegram channel, you can just search Echo Charts on Telegram. It's a place where I share, you know, I replace hindsight knowledge with foresight experience basically. So I show my trades before they happen and mark up ICT examples so that when you see it in price action next time for your own trade, you can actually get involved. More so, I'm not a financial advisor, as you can clearly see. I'm just presenting my view of what I see in the marketplace. Now, without further to do, let's get down to the lower time frame and actually explains what happened. So you see where I was looking for shorts instead of longs. Now, as you can see from this push to the downside, now I don't want to talk about the probable long scenario that was actually because we are actually inside a weekly order block or a weekly demand zone. It doesn't matter the term you use or weekly support. We're actually in a weekly zone that want some bullishness. I'm not going to talk about that. I'm just talking about what I was seeing in today to get me to some lower discounts for some longs, which didn't happen. Now, see this. First off, let's just quickly go to down. Now, ordinarily, you'd be expecting this place to be sensitive, which it was right here. Now, on this retracement down or on this push down, I'll be looking to get involved, or I was looking to get involved. Not I will be, because I actually did get involved. I was looking to get involved at this very shoulder block and a stop above this side. Even if it did react off the rejection block, my stop would have been above this side. And I was looking to take it down lower to either this fair value gap or liquidating this low for further discount on the monthly time frame. But none of that happened, unfortunately. Instead, I was hit and we did a rally up. Now on the 5 minute chart, I want you to focus on this chart based on the Q zones and where price appears so that you can actually be able to work with or work with me to suggest where I was taking a trade and where I was hit and all those stuff. Now, with what we're seeing here, we can clearly see that this was outside the Q zone, so there was no way I would have been taking this reaction and saying I took a trade. Right? Come on, yeah. There was no way I would have been taking this reaction and say yes, I took this trade. No, outside the Q zone, that didn't fit my criteria. However, this 30 minutes of the block was inside the Q zone. And we got a little bit of drop and a retracement which I was capitalizing on right here. Let me pull out some lipstick on the chart so that we actually see what I was talking about. Now, on the open of the 30 minute candle, I had this first push down, breaking this low. Ideally, you want this other block to be respected as a what now? Bearish, sorry, as a bearish breaker. It wasn't. Price push further high to the 62% retracement level. However, I couldn't be getting involved here. Why? Check out the time this kind of formed. 8 o'clock. It wasn't 8:30 yet to validate my high probability New York trade, or the, if you watch Cow Sniper series on the ICT, is this Cow Sniper series? I really don't know the. Just look for, it's not Cow Sniper series. Cow Sniper series was swing trading. Yeah. If you check his precision trading concept, right? Or you don't even need to go that deep. Just check what he's currently doing on his mentorship, right? You will know why 8:30 was time frame I'm looking for on this currency pair or on a currency pair. So I was looking for 8:30. This entry wasn't 8:30, so I wasn't entering there. This entry, however, was after 8:30, so it was validated. So I did get involved here. More so, you can check out Telegram group. Actually distance the price to make sure if it's hitting that level, you should be hitting it by 8:30. I didn't want just come here and hit me and take me on a ride. Right now, that out of the way, let's discuss this. I was looking for a short, but price didn't give me that. Instead, we did get this nice long, by the way, which I wasn't part of, unfortunately. Okay, so while I was looking for a short, some key ICT concepts or some key ICT criteria made me understand that if I'm not going to get a short, I'm probably going to have my stop loss hit. Now, how was I able to come up with that fact, which we see in hindsight has already played out? Now, let me delete this because I don't think we need that anymore. But we do need the Fibonacci level, right? Price itself, I don't know if you are going to write this down or want to play it later, but just keep this in mind. Price itself is rigged. Price runs in an algorithm. Now, what this simply means, in my terms, is that if you take from this high to this low and this whole block of consolidation, this whole consolidation has been rigged all from this low. Whatever was transpiring here in price action, the smart money that bought this low knew it was going to happen. So it was only a matter of them taking price here and doing what they wanted. Now, I'm not trying to say I know they were going to do this, but if you have that premise in mind, if you had that mindset that price is already rigged, price is already set to pricing what they want it to pricing, if you have that at the back of your mind, or if you had that established, you believe that it will be easier for you to accept certain things that get to pan out in price action which doesn't go in your favor, like taking a loss or being stopped out at break even naturally, stuff like that. When you have the belief that price is rigged, you'll be able to accept those facts, and it actually helps you manage trades better. Now, why I was able to spot out that price is not going to fall anymore after doing this, as you can see, I pointed out that we're in dead money territory, which means this bearish move I was looking for doesn't contain what now. There was no, this wasn't an actual push, then it was just a consolidation for more long, this is a dead money move, which I wouldn't be, for a scalper, this more than a 20 pip, this was more than a 20 pip drop. But for me, who is a day trader and a short-term trader, this is dead money to me. for a scalper, this is very profitable. I don't discredit that. But for me, this is so dead money. Now, moving on, you can clearly see from how price reacted. Let me delete this so I can explain further. To get to this 30 minutes bearish of the block, we did have a bullish of the block here on import pricing to the upside. We came down. Ordinarily, you expect here to serve as what? The bearish of the block, but we didn't. We violated it with this candle. Push further up. Did it warrant an entry based on time and price criteria? Then we did come down to react of this bullish of the block. You know, the bullish of the block is the last down move before an impulse pricing. Bearish of the block, last up move before an impulse pricing, right? To the upside or to the downside, respectively. Now, we did come down to react of this bullish of the block to push further high, reacting of this 5 minutes rejection block and pushing lower. Now, notice the shift in market structure, how the price was manipulated right here. For the normal high, everything right here is just a consolidation for FOMO in and out of the marketplace. But for me, based on how I trade ICT concept, I look at this as what now? A push down, a what now? To a bullish order block, a push back up, a rejection block, then a push further down to liquidate a low. Why are we liquidating this low? Because this bullish order block has already been tested. So on this push further down, I don't expect this to hold. I expect it to be more liquidity. However, this wasn't tapped immediately. What did we do? We went further up to tap out this what now? Bearish order block. Mind you, this bearish order block, this so candle here, give me a minute. This so candle here, you can switch, you can play with time frames. You might be able to see this better. Let me delete that. That isn't it. This so candle here. Let me call this let me any red. Right? Is that visible? Let me see. Can make this wow, forgive me for the I'm just looking for stuff. I'm not used to trading the trading view chart simply because I do most of my chart analysis on MT4. Why? Because that's where I trade. So with this level, this bearish of the block, any reach into it. So with this bearish of the block, any reaching into it will be constituting a short. Now, for this short to materialize, or for we to say this is the short to actually eventually draw our stops to break even, we need to see a low get liquidated. What was the low getting liquidated? This low, which we see after this reaction, we did liquidate it right after. Notice this low didn't liquidate the low. It was after the reaction of this other block. Let me draw it out of time to see. After just tapping into it, right, touching some of these fair value graphs, and we liquidated the low right away. That warrants any smart money trader trading on an intraday basis that had a short from either year or year to be putting their stops to break even. Meaning, if I had a short, give me this. If I had a short from here, that was this level, I should be break even by this, this high right here. But if I had a short from the bearish of the block, this 30 minutes open, the open of this 30 minutes bearish of the block, I should be putting my stops at this level right here. So these would have been the three probable areas to be putting stops as a as an for an intraday price action basis. Some people might argue that well, you could have put your stops here after you see this push up down, this further push down, where honestly your stops, putting your stops here is actually inviting most troubles, because You see this price action move to the upside, right? If they wanted to just recapitalize of this rejection block and push it back down, they could have, and I would have been taking a premature loss, which I wasn't looking for. Now, that aside, that explanation I just gave, if you can rewind the video, this bearish shadow block, reading price as a tape, bearish shadow block, impulse, flash down, expecting a breakout, didn't work, flash down, bearish shadow block, bullish shadow block, impulse, respect, bullish shadow block, respected, crash down, bearish shadow block, respected, liquidation of lows, right? At that point of liquidation of lows, ideally you want to be closing some partials, right? That's if the price was not in a huge momentum pushing to the downside that doesn't allow you close partials. You want to be closing partials ordinarily. Say you left your chart for like 10 minutes and you came back to see price already trading at maybe this level, for instance. You want to be taking partial at this level though. However, if you were live on your chart, you should be taking partial at that level right away. Now, while I took partials, right, I put my stops to break even based on what I see on the order flow, what I see on the overall order flow, right? It wasn't satisfactory for me to see this type of price action right here, and also this type of highs right here. Instead, I was more focused on getting, my stocks protected, because now the highs were too much and price wasn't pushing as fast as I would have anticipated or I would have liked. That would have, negate the trade pretty much. So that being said, I think I'm just gonna cut those out. Now, based on the whole schematic that played out there, this consolidation, right? Based on this whole consolidation that I just explained and how price manipulated the consolidation, after taking profits at this level, your stock should be at break even and just leaving it to see what gives, if we are going to liquidate this low and look for further discount prices, or we are just going to push, higher and higher and higher. Right? Of course, we did see why we did push higher and higher. What I want you to do is just really go back and backtest this. When you see a bullish order block or a bearish order block, study the institutional order flow candle by candle, both on lower time frames and higher time frames, and see, right, what price is doing, if it negates a long or a short. Now, for this scenario, although I wasn't active during this session, but for this scenario, let's see what negated, a stop above this high. Now let's consider this. Now, I didn't take this trade, so whatever I'm going to say right here is based on hindsight, and I haven't even practiced it. This is what I actually practice. This is what happened, the price action that I knew about. Now, what's going on here? Okay, you see, we had a high that got tapped, then a breakdown to the upside, then a further breakdown, a convincing breakdown from the high to the low. Now, having that breakdown, what else do you want? Or what else are you looking for? Not what else do you want? You're looking for buy side liquidity to get taken for more sell side, or sell side liquidity to get taken for more buy side. Now, I'm not going to go to what happened here and be like, oh wow, right? This was the sell side liquidity that was taken for buy side, and what now? This was the buy side liquidity that was taken for sell side. You already know that that's not my cup of tea, because I don't dwell on giving simple examples in this channel. I believe if you go through basic ICT, content or basic ICT stuff on this channel, you're able to get that sorted out, that above highs and lows, there are liquidity pools, that are willing to be tapped. However, what would have negated you after taking a sell here based on this liquidity pool and saying, oh, we might be shifting bullish, is this: we reacted of violating this bearish breaker. Let me delete this or close it first. Violating this bearish breaker, we reacted of violating it, coming back down, reacting of this bullish order block, which is also within this candle's low, going back to the upside, having a momentary market structure shift because of, you know, violating this high. We had this high and what now, this low as our basic range, right? So we now have this high and this low as our basic range. Price coming back down, giving a nice retracement to a logical level. To pull your feet, you will know this is a logical level. That's not what I shouldn't be putting pips to show that was a popular trade because I didn't take it. You know, I want to focus on the hindsight, you know, the hindsight schematic pretty much. So we're tracing back down to logical level, clearing stops, but not breaking the low that what now this whole move started from. So having that low intact, clearing stops, then it further push up to the upside. Excellent, right? Looks simple. But before this further push up to the upside, I would have already be broken even if I took a shot from here, simply because price did this. So upon price making this trade, right, I'm already break even. More so, upon price liquidating this first low at this point, let me delete this. Notice this low is a little bit lower than the other. Sorry about that. What's going on? Alright, so let me just drop it here. Wow. Now I have 3 or 4. I think that should be my network issue. Right? So notice this swing low was tapped. Now for the purpose of a 5-minute chart, or for a 5-minute chart, this is enough, right? Only when you are going to your, you know, much higher time frame like the 4-hour, 1 hour and daily, you expect a stop loss, a stop hunt to be more than, you know, 5 pips, 10 pips. Usually for a 5-minute chart stop hunt, it should be more than 5 pips. You can check this out from here and see that this from here to here wasn't more than 6 pips. So I'm looking for ideally 5 to 10 pips. So if you were entry just after the low, the stop would have been 10 pips away, and that's pretty much it for any 5 minutes stop hunt type of trade. However, from the 1 hour chart and, you know, higher, you should be looking for a what now, at least a 10 minutes read, 20 a 10 pips read, 20 pips read, depending on how the case may be. Now, as this low was tapped, you did get an impulse price swing. Right away, as you were seeing this tapping of this low, you are moving your stops from this high to break even, you know, whatever your break even might be. More so, you want to be wary of what this other block will be doing. Right now, we see we didn't quite tap it, which is fine. However, we didn't quite tap it, but the movement breaking this intermediate term high should have warranted you knowing that, oh, we are probably will be having a shift in order flow, right? That's pretty much it. And I think that's some sort of the explanation, quite a crude explanation. I've been quite, you know, away for some time, but I see this every time while I'm trading, and I usually just give trade management advices, and I don't actually show what I was thinking about what's going on in price. You get? So this video, I think, makes me explain to a great degree of detail of what I was seeing in price action, and how you can actually see it too. First off, looking for a low or the next near-term low on your lower time frame entry to be broken. When it's broken, going to break even, or when it's tapped going to break even and taking some partials, then allowing it slice. It doesn't necessarily need to be a significant amount. It might be a 10%, it will suffice. Okay. Now, what I'm looking for tomorrow in price action is this. Now we already see this impulse pricing to the outside, which unfortunately I wasn't part of. Now I'll be deleting this and looking for what now? This bullish order block. Right? If price does come down here, give me a buy entry, I'll be poised to take a long. Doesn't? Alright, fine. Why am I taking a long? You've seen this high broken, and now we see this block of consolidation from this low to this high. Let me use you see this block of consolidation. So what I'm anticipating now is a measured move, right? A measured move in terms of this whole area will be replicated. Sorry. Sorry. This area will be replicated like this. It might end up, achieving that right here, right? And I'll say this is the what now? This is the level to react and sell off. But I do expect, at least if I get a retracement, I should be able to capitalize on the move. It might give more than more than that though. We might end up what now? Clearing out this equal high, because taking price there will be very close to this equal high, clearing out this equal high, filling this liquidity voice and going into a premium on the higher time frame. Now I don't want to explain this because I explaining my chart to make this video too long, but I just want to break down what I was saying, especially for the guys on my Telegram channel looking for the examples or studying the examples, so that it will be more beneficial to them, and they'll be able to actually understand what's going on in the price section. And it doesn't necessarily, or I don't necessarily have to post and be like, go break even and stuff like that before they know, oh, it should be a break even, action I should be taking at that point, right? So I'll be pretty much it. I hope to see better examples to record more trades, and hopefully some winning examples as well, because despite wanting to show you guys, you know, challenging examples in price action, I also want to win trades. All right, that'll be it for now. Please, if you like my content, please like and subscribe to the channel. More so, share with your friends, so it helps the algorithm. All right, that'll be all for now. Bye bye.